Hey everyone, Sean and Anthony here with the Geeks of Finance. Today we are discussing how to trade gamma exposure. We've had a number of videos where we've discussed the concepts of how gamma exposure works. I'll put a link down to our full playlist in the description below. Today we're going to actually be talking about the different types of trading strategies you can put on using gamma exposure. So gamma exposure gives us two important data points. Number one, it's telling us where option dealers will most likely be the most active. And this can manifest in the form of support or resistance. You see here, we've highlighted our dealer cluster zones. These are our support and resistance zones based on where dealers are likely to be the most active. Number two, gamma exposure tells us what strike prices will be the most active from an investor standpoint. And this is based on open interest. Open interest is one of the components that goes into calculating gamma exposure. So for example, here we see a gamma exposure concentration at the 480 strike. This is telling us that market participants have a lot of interest at this strike price. And so oftentimes these concentrations can act as magnets, drawing price into those levels.
So we also find that Gamma works on a zero data expiration basis as well. And in Discord that morning on the 16th of January, we shared that the Gamma was negative for SPY. And we had some targets between 473 and 475. And this is when SPY was at 476. Well, the day's low was 473.06.
Yeah, and I think a lot of people have heard of the concept of gamma exposure, but they're not really sure how to practically trade successfully using gamma exposure data. Here's an example on Shop. In this example, Shop had a pretty steep sell-off all the way from the 80 level down to just above 70. So over a 10% sell-off in just a matter of days. As we're scanning our gamma exposure dashboard, we notice that this large gamma exposure concentration at the 80 strike price is still there. And we see a lot of volume coming in between 70 and 80. Not a lot of volume coming in below 70 and not a lot of gamma exposure below 70 either. This indicated to us that the 70 strike price was most likely a support level, which also coincided with our zero gamma level. Interestingly enough, this was also a previous support just on a technical basis. Price had bounced off of that 70 level multiple times in recent history. And just coming over here to our Discord chat, we actually had posted this idea on Shop on January 4th. We alerted our members to an idea of buying a butterfly spread which targeted the 80 strike price with that big gamma exposure concentration was. We actually liked buying the 78 calls, selling two of the 80 calls, and buying one of the 82 calls. This was the basis to our butterfly structure. And of course, you can scale that to as many spreads as you like, but that's the basis of the butterfly spread. Targeting the January 19th expiration. Total risk on that idea was 14 cents with a max profit of $1.86 if price pins at 80. Shop was currently trading at 73.43. So there's a number of different ways you could have played for a move back up into that 80 level. But the primary idea is that this gamma exposure concentration had the potential to act as a magnet for price, drawing the stock back up into that 80 level. And so what happened? Just a few days later, on January 9th, we actually posted an update highlighting the fact that Shop had traded all the way back up into that 80 strike. What just a few days prior to this seemed like almost impossible, a 10% move in just a number of days, actually came to fruition based on this gamma exposure level. And so our particular trade was now trading 33 cents after initial entry of 14 cents. That's 1.5 times. So we decided to lock in some profits. We still had another, 5x potential to go if we wanted to hold Shop into expiration. But of course, we want to be good traders, lock in our profits when we can. And so this was an opportunity for a quick move up and a quick profits of 1.5 times our initial capital at risk.
That's a great point, Anthony. And another way you can handle wanting to see a trade reach the ultimate potential is to at least take something off so you get your principal back. And let's take a look at SPY going back to the October low as an example. And this is a little bit of a different take on gamma. So we looked at the idea on Shop, which had positive gamma. and basically represented what we thought was a good entry point in an overall uptrend. But sometimes gamma reaches such an extreme, either to the upside or the downside, that it actually becomes a contrarian signal to go to take a trade in the opposite direction. And this was a great example and also a fairly pivotal recent moment. Gamma on SPY at that point, that was negative almost 3 billion. And once we see SPY reach 3 or maybe 4 billion at the most to the extreme, that's usually about as far as it gets. And it's a pretty good indicator that without much warning, you could start to see rapid moves in the other direction. So we had this concentration at 410. We had another gamma cluster we were watching at 400, but we knew it was at least a very good indicator that we were likely near the turning point at that point. So let's take a look at the chart from that time. And that day on the 27th, you can see even the body of the candle on the 27th basically stopped right at that line with a little tail below it. And that coincided with that big negative 3 billion GEX reading.
Yeah, and what's interesting is that the low was on October 27th. It took a few days for a rebound and a rally to actually form. If you look on November 1st, we actually noticed that total gamma had come all the way back to positive. So just 3 days later, our gamma exposure levels had gone from negative 3 billion to a positive level. You can see price was trading at 423 at this point. And from that point forward, gamma exposure was positive going all the way into the end of the year. So gamma exposure is really leading you every step of the way. The reversal on October 27th, the flip positive just a few days later, and staying positive through the end of the year. And what did we see? We saw the S&P rally over 18% for the next couple of months into January. So a really powerful way to view market participant positioning and target levels. Here's another great example of how we use gamma exposure to trade. This time we're looking at Snow. Snow had a large gamma exposure concentration at the 200 strike price. However, price had just sold off all the way below 185. And this was a really interesting level because we were coming into this dealer cluster zone, a large gamma exposure concentration actually on the downside, as well as this double bottom that seemed to be forming. We were kind of bouncing up off of this 183, 184 level. Volume was also increasing between 180 and the 200 strike. So we had a lot of volume coming in. We had a large gamma exposure concentration to the upside, and we're bouncing off of a support zone. So of course, we highlighted here that 200 to 210 has the potential to be in play going into the February 16th option expiration. And again, this was another idea that we discussed in Discord. There's a number of ways you could have played for a move up into that 200 strike. We actually liked a slightly more conservative play, selling the February 16th 185, 180 put credit spreads. So that's actually selling the 185 puts, buying the 180 puts. This particular trade strategy was offering a max profit of $2 and a max loss of $3, as well as a little bit of downside cushion because these were out of the money. So that trade was initiated on January 17th. On January 22nd, just a few days later, what do we see? Snow had traded all the way back up right into that 200 strike level. And so again, I want to reiterate the credibility that these large gamma exposure concentrations have. They don't guarantee that price is always going to come into them, but with the right analysis and the appropriate trade setup, you can have a profitable strategy. And so again, we posted this in Discord. The idea gained 90 cents in 5 days. So we were about half of our max profit potential. We decided to lock in half of the position and collect those profits. A couple of days later, on January 24th, Snow had continued trading higher into those upper gamma exposure levels at the 210 strike. So we decided to exit the rest of our position with around 57 cents remaining. We didn't want to hold it all the way into the February 16th expiration. So we in total had $1.43 out of $2 of our credit as profit. And that was within a few trading sessions. So I hope you're beginning to see how these gamma exposure concentrations impact price action. And the reason is because they are representative of so much market action. They're giving you insight into what dealers are having to do by hedging under the surface. They're also giving you insight into what market participants may be speculating as a potential price target. Remember, open interest is a factor into the gamma exposure calculation, and open interest represents new money coming into the market. If you're interested in accessing our gamma exposure dashboard, as well as the tools and trade ideas that we discuss on a daily basis, go to geeksoffinance.com. We've got 3 pricing tiers, something for everybody. We'd love to have you join our trader community in Discord. I'll put a link down in the description below for you to check out. Thanks so much, everybody, for watching. We'll see you guys in the next video.